You have likely heard this term in movies about the financial crisis, but what exactly is a CDO and how does it function? A collateralized debt obligation is a complex financial product that bundles together various debt assets into one package for investors. The package acts like a container, holding pools of loans that generate interest payments over time. The debt is sliced into layers called tranches. Each layer carries a different level of risk and a corresponding potential return. Senior tranches are paid first and are generally safer, while junior tranches offer higher interest to compensate for the greater risk of loss. As you move from senior to equity tranches, the risk of losing principal increases, but so does the potential annual payout. While they provide liquidity to credit markets, understanding the underlying assets is crucial, as they are notoriously difficult to value. CDOs are advanced tools for institutional investors. Always do your own research. Subscribe for more finance basics.